How did a veteran get their credit card balance paid off at closing by a seller? How is that even possible? You may know that you can get amazing benefits with a VA loan like no down payment, but did you know there's a way for the seller to pay for even more of your closing costs? That's right. In this video, I'm explaining what seller concessions are and spilling the beans on how to maximize VA loan seller concessions so you can keep more money in your pocket. Hey everyone, I'm an Army veteran turned top producing mortgage loan originator, and I'm passionate about helping veterans get the most out of their VA loan benefits. I've helped countless veterans navigate the home buying process, and today we're diving into the often overlooked strategy of maximizing seller concessions. Buying a home can be expensive. It is likely the largest purchase of your life, and even with a VA loan, you're having closing costs which are different from a down payment. Typical closing costs are appraisal fees, title insurance, recording fees, credit reports, and more. These can add up to thousands of dollars. But there's good news. Sellers are sometimes willing to pay for a portion of these costs, which we call seller concessions. And boy, do we love us some seller concessions.
We love it.
Here's how to get the most out of seller concessions with your VA loan. Negotiate strategically. Work with a skilled real estate agent who understands VA loans. Veterans, listen up. I cannot emphasize this enough. The buyer's agent can negotiate seller concessions directly into your purchase contract. And a side note, I'm licensed in over 40 states and I've worked with hundreds of realtors. If you need a realtor recommendation in a specific area, please reach out to me. Know the VA limits. The VA has specific limits on how much a seller can contribute. Make sure your request falls into these guidelines. This is super important, and I will show you in just a minute why. Market conditions. If you're in a buyer's market, meaning there's more supply of homes available than available buyers, then you have negotiating power. If a home has been sitting on the market for 40, 50, 60 plus days, then you have leverage. If a home's been on the market just for the weekend and you're making an offer, well, you probably don't have leverage for seller concessions, especially if there's multiple offer scenario. Home inspection leverage. If the home inspection reveals issues, use that leverage to ask for even more concessions. A seller does not want to put their house back on the market, especially after a home inspection found repair issues. Okay, let's look at the power of what seller concessions can do. In this scenario, let's pretend you want to make an offer on a property with an asking price of $400,000 that has been sitting on the market for 30 days. One strategy is to offer a little less than asking. Let's assume $10,000 less at $390,000 with a 30-year 6.5% interest rate. The other option is to offer the seller's asking price of $400,000 but ask for $10,000 in seller concessions to be applied towards buying down your interest rate. A 30-year 5.5% interest rate, the $390,000 loan amount has a principal and interest of $2,465, and the $400,000 loan amount has a principal and interest of $2,271. That is $194 cheaper a month. That is the power of seller concessions. And guess what? The seller still nets the same of $390,000 in both of these scenarios. But what if you would not qualify for a mortgage because your debt to income ratio is too high, or because you're failing the VA residual income calculation? VA residual income is the discretionary income that's left over each month after paying all your major expenses, including your mortgage payment. Residual income requirements vary by location, loan amount, and by family size. But pro tip, you can use seller concessions to pay off personal debt and help you qualify for this VA loan. This is an absolute game changer for veterans. All right, scenario time. Let's pretend you have $9,000 remaining on an auto loan that carries a $650 a month payment. With the auto payment, you are not qualified, but if you were to pay it off, you would qualify. If the seller offers at least $9,000 in seller concessions, then you can use that to pay off your personal auto loan at closing and get into a house. There are limits to how much seller concessions can be given. It is 4% of the appraised value plus customary closing costs like discount points appropriate to the market, appraisal fees, pest inspections, etc. That is a whole different video that's going to come soon. Maximizing VA seller concessions is a powerful way to make your dream home more affordable. Don't leave money on the table. Do your research, work with a knowledgeable team, and negotiate confidently. If you need a fantastic VA savvy real estate agent, drop a comment below. I might be able to connect you with someone amazing. And if you're ready to take the next step, be sure to subscribe to my channel for more VA loan tips and tricks.